My name is Terry Kashat, for those of you that don't know me. The main theme for today is adapting to the current market to level up your winning strategy so that you could have more deals, so you could do better business for yourself. So adapting to the current market to level up your winning strategy and get buyers committed to buying homes. A part of this presentation is going to include accepting the current market for what it is and really accepting it for what it is so that we could learn how to engage our borrowers, our buyers, when they have a true reason, a real reason to not buy. Because we got to embrace the current market so that we could actually understand where their head is at, put ourselves in their shoes, so to speak, and really see who is a buyer today. Just because we want to have home buyers doesn't mean everybody is a home buyer right now. There are some people that shouldn't be buying right now, and there's a lot more that should be buying. And that's what we're going to be getting into here today. So before I get into that stuff, I want to talk about the market, what we experienced for 2022, and what we believe we're going to be experiencing for 2023, okay? So for 2022, in this last quarter of the year, we currently have 7.5% interest rates. 7.5% interest rates, compared to 3% the same time last year. So current market, 7.5% interest rates compared to 3% last year. Appraisals and home values. Everyone believes that home values have come down this year, because people are not making as extravagant of an offer compared to what they were doing earlier this year, compared to what we were doing in 2021 with 10K, 30K, 50K above asking, right? Depending on what it was. While home values are still the same. If anything, home values have increased. We got two other loan officers here, Sebastian and Ron. I think you guys would agree that home values have not decreased this year. Home offers have decreased. Home values have pretty much stuck, if not increased. Would you guys agree with that notion? All right. Connect team, would you guys agree with that notion for what we're seeing? All right. So there's this idea out there that home values have dropped, but they haven't. Just offers have become more realistic. Two is what we're going to be experiencing through the rest of this year and through, I believe, to be through half the year of 2023, okay? So through almost half the year of 2023. I'm saying June 1st because that's when summer is going to begin, and I think we're going to see things kind of stabilize again. With that being said, I want everyone here to prepare for worst case scenario. Prepare for the worst case interest rate. Prepare for the worst case value, meaning values don't drop. Values stay up instead of come down. Values stay up. We got to have the mindset of how do we do business if interest rates stay where they're at today or increase, which we all heard the Federal Reserve is increasing the rates for the foreseeable future. So for the next 3 months, we all have to believe rates are going to go to 8%, maybe higher. I think they're going to go to 10% at some point in 2023, personally. I also believe that home values are not going to drop as soon as we all think. So I'm preparing to be able to do business in that environment. And if rates drop, if values drop, we all get lucky. We all get to do easier business. We have more buyers that are on the market, etc. But I want to prepare to have a winning strategy regardless. If we only prepare to win if rates drop or values drop, then you're not going to win if it doesn't stay that way. If we prepare for both, then we're going to win regardless. We're going to do business regardless. So before I get into what we're seeing already and what we believe we're going to see in 2023, more details about it, does anyone want to add what they've been seeing as far as home value? I want to speak to the realtors right now. As far as home value, home offers, tell me about what you guys are seeing today that's actually winning and working compared to this same time last year or even March and April of this year, as late as March and April of this year. If I could hear from some of the realtors on the team. Noor, I'm going to call you out as leader, one of the leaders of Golden Key.
Yeah, sure. So what I've been seeing is now you can get a little bit more seller concessions than before. Before you couldn't get any. So like what I've been doing is getting seller concessions from the sellers and buying down points for the buyer to reduce the interest rate a little bit, make it a little more affordable. So that's been helping out a little bit, So they're willing to take a little bit, you know?
So seller credits are back in the game upon initial offer.
Yep.
Not just waiting for inspection or for something to happen.
Yeah.
Upon initial offer, seller credits are being accepted.
Initial offer.
I want to go deeper down that. Are you guys seeing a lot of below asking or below estimated value with seller credit, or you guys are offering pretty much at value with a seller credit?
We're offering a little bit lower, you know? So what's happening right now is some of the houses were inflated, and a lot of sellers don't want to bring their house down. Like they heard their neighbor 6 months ago sold for a certain price. They still like to stay around the same amount. It hasn't gotten into their head that the buying power is less, so that's the issue. What's going on is that it's not, you know, it still needs, like, the price needs to come down a little bit so buyers can afford it.
Mm-hmm.
So that's kind of what we're seeing, you know. So we are offering a little bit lower, and they are taking it. Not much, like.
Yeah, give me an example for like a $400,000 offer.
Yeah, for like a $400,000, you can probably get maybe $20,000 off the purchase price. 10 to 20.
Mm-hmm.
More than that, they usually don't accept it.
10 to 20.
Still approved over 20 over.
Yeah.
And it appraises for 20 over, you're saying?
And it's
No, 20 over what it went for. Like,
Okay,
starting of the year.
Yeah.
got
It
it.
was bad this time.
So with that type of offer, plus a seller credit, or like that's including a seller credit?
No, that wouldn't be with a seller credit, you know? Like what I would they would think 20,000 less, I would do 10 in seller concessions and 10 off the price.
Yeah.
You want to get 20 off.
So in total, 10 to 20,000, call it 15,000 for like around a $400,000
Can I add
home.
that it also depends, especially with the way that houses are staying on the market a lot longer now, and so I've noticed that with the last few deals that I've done where houses have, it's been a house that has been sitting on the market for well over like a month or two.
Mm-hmm.
I've offered under ask, they've accepted it, post inspection I asked for seller concessions, maybe 5 to 10K worth of seller concessions, sorry. And it's been accepted. So I feel like it's very dependent upon the home and that right there and how long it's been on the market, because the desperation of the seller can vary with that.
Okay. So deeper down that, Marianne, I'm going to go to you. If you had a seller credit in the beginning, or the part of your offer, they accepted it, and then home inspection comes and you guys realize that there's no challenge, or we realize there is a challenge, are we getting more of a seller credit?
I mean, I would try to, but realistically, it probably wouldn't happen.
Yeah.
If you had already, if in initial offer you ask for seller credits, they're probably not gonna wanna give you any more. They just kind of tell you that this is what they agreed upon, which is why I typically don't like to do seller concessions in the initial offer. I like to wait for inspection and see what we're looking at, and then
Agreed.
go towards seller concessions.
Yeah, I agree with that. I think one of the strategies is to, once you get the seller to accept a number,
Exactly.
you know what their bottom line is at that point.
Exactly.
And now, me and Alex are going to talk about a product that will allow us to play with it, especially with with the strategy you're talking about. If we know their bottom line number was 400, and we know estimated values are higher, we have some room to work with the appraisal, and your inspection comes in, you guys thought you were going to ask for 5,000, but really you're going to ask for 7,000 now, 7,500 as a seller credit. I'd rather wait until the inspection, because you could even play with the offer to the point of, let's say you guys don't want to risk losing the deal. You could say, hey seller, we know your bottom line number was 400. We're going to offer you 4,075. We want you to give us a $7,500 seller credit.
Yeah.
The seller's getting the same number that they originally were down for. We know the home's going to appraise because we already did estimated values, and they already accepted below market, below appraised value. And now our buyer, for only a cost of like $40 a month, by increasing that loan amount, is reducing their closing costs by $7,500. And it's huge. That's huge. If you do it in the beginning, yeah, you could get that, but you're kind of shooting yourself in the foot when you get the inspection, because it's hard to ask again or for the real amount you would have asked for. Either one works, but the name of the game right now is we can get seller credits, we can reduce the amount of money that the buyers bring into closing, and it just got to be a reasonable offer. Understanding that sellers are accepting a certain threshold below appraised value, a certain threshold below their listing price, and playing with that to make our buyers more easily close when it comes to the down payment and closing costs. So I'm going to skip to one part because we're on the subject already. I'm going to come back to the market and these examples I have here in red and green. We're going to come back to that. I want to talk about a product which is a buy down. And every loan officer in the room knows about the product we're talking about. The realtors should by now know about the product as far as what a buy down is. If we were to have a seller credit, let's call it for a $400,000 offer, and we got a $9,000, $8,000 to $9,000 seller credit, we could get the buyer's rate 2% lower than what it is for the first year, 1% lower for the second year, and then the rate is now their real rate, which today, if we were to do that deal, is 7.5%. I'm gonna show you guys a graphic that breaks it down, but the idea is the seller is paying upfront for the buyer savings. So if the seller was concerned, if the buyer is concerned about, I can't afford this payment, it's $400 more than what I wanted. Okay, well, this exact example will bring down their payment by $400 to $500 in the first year, and hopefully rates do drop in 1 year, right? Hopefully they do get to 5% in 1 year. We could refinance them before the rates go up to 6.5 for the second year, before it goes up to 7.5 permanently for the rest of their loan. And I think the fact that we have 2 years, and I'm gonna let Alex jump in here once I show the graphic, I think the fact that we're playing with 2 years here on this buy down program, it gives so much room for a refinance opportunity. Could we guarantee that to the buyer? No, and we gotta be careful to not guarantee it to the buyer. Could we go based off confidence levels of, in the last, I've been in business since 2009. And since 2009 to today, there's been 4 refinance booms. 4 times for at least 1 year where refinances were happening because rates dropped enough to where we could save people $150, $300, and in the most recent refinance boom, $500 a month. Crazy amount, right? So I have to believe that even though we can't guarantee it, I have to throw out the confident stat that odds are in the next 2 to 3 years, we're gonna have rates go low to where even though you gotta be mentally prepared to pay a higher payment, you shouldn't fall into that position because rates are gonna drop, at least to 5%. I don't think we're gonna see 3% rates again, but I think we could easily see 5% rates. The question is when. The question is when, and that's why I want all of us to prepare for the worst case scenario. I'm gonna show you guys an example of this product that we're talking about here. The buy down. Okay. Nope. Okay, so in this example, we have a buyer who bought a house at $400,000. He put 5% down, so his loan is $380. Today, with a 720 credit score, his rate is going to be 7.5%. That is a good rate today. Believe it or not, that is a good rate today. That is a perfect borrower. Okay, 7.5%. His monthly payment would be $2,700 per month. Should we utilize this program where the sellers are already giving a seller credit? I think it's a consensus that we're getting seller credits out here. Should we do this program? We're gonna save the borrower $9,000 over the course of 2 years by this program. We need to get a seller credit of $9,000 to be able to make this deal work. So in the first year, he's gonna have a 5.5%, save him $500 a month for the first year. And the second year, they're gonna have a 6.5%. They're gonna save another $260 a month in the second year. Then starting the third year, they go back up to the real deal, which is $2,700 per month. And at that scenario, by that time, we're hoping in the next 2 years, the rates would have dropped to 5%, where we could get him this 5.5% that he had temporarily. We could do a fixed rate for him at that point. So this is a big item, but it only works if we're getting a seller credit. So should your buyer be looking at a home where a seller credit is not realistic, we just can't do this. It's gotta be, but we have other options, which I'm gonna get to in a second, where we can make their rate much lower. But are you looking for the buyer who needs their mortgage payment to be lower in order to close on a home? It's gotta be the home where there's gonna be a seller credit available. If there is no seller credit available, you just can't do it. So you gotta know when we can make this type of offer or not.
Can the buyer buy it down?
They can't, not on this specific program. But we can do a different way of bringing their rate down. So for example, the way that mortgages work, our whole team and our boy Sebastian knows this one, the lender pays our commission, right? If we do it where the borrower pays us directly and the buyer pays us directly instead of the lender, the buyer will get the same interest rate that I would get as owner of a mortgage company. Same exact interest rate. Not higher, not lower, same rate. We could potentially, in this example, bring them down to a 6.5% if we did that. If they paid us instead of the lender, we could bring them to that, and that's permanent. Now, realistically, that's for the person who needs to do it that way, or the person who's really, really trying to secure their long-term. In reality, to go further down your example, in reality, most people are gonna play the gamble of, I believe rates are gonna go down in the next 3 years, and instead of me paying you guys to buy down my rate, let me just do this, or let me just take whatever it is, and I'm hoping that the rates are gonna go down enough to where I could refinance to a 6.5% or a 5%, hopefully even a 4%. So that's that. Do you have another question with the same example? Any realtor have another question with the same example? All right, Alex, is there anything you want to add to the buy down program and how we're utilizing it, how brokers, any loan officer is utilizing with UWM, any tips and tricks you could give us?
Right. I mean, just to build off that last statement where the borrower is actually paying Terry in this case, that is, once you pay it, it's gone. Right? There's no way of making that back. So on the temporary rate buy down, if we do rate and term within the next 2 years, what's still that's getting added to an escrow account, so you don't lose that money. So that's just something to think about in the sell for Terry, I guess, in that case, because it just gets applied to the payoff versus the points. You're never going to see that again. And then from selling this to the actual seller, right? It's just marketability, right? Bringing more borrowers to their listing without lowering their asking price, and they're still making the same money. The seller's getting what they want in asking price, and it's just like, again, it's bringing more buyers to the table. So I'm just reiterating it. That was exactly what Terry was saying.
Very good. So I want to preface the point of, yeah, I think majority of homes are going to accept the seller credit right now, but just be aware of what home you're looking at. If the home is not able to have a seller credit, then we cannot do this strategy. But I would argue 75% plus of homes right now could take advantage of this. And I would argue that there's a plus above 50% chance where rates are going to drop enough where we could refinance them to this rate anyways, right? So it's a confident gamble that I would do all day. If the buyer wanted to pay for this rate today, it would cost a lot more than the seller credit that the seller is giving us for $9,000. A lot more, too much, to where they would never do it. So it's a great program. It's something to not push so hard to the buyer. It's something for us to know as the mortgage professionals and the real estate professionals to know, okay, the buyer really likes this house, and I know that this house will accept the seller credit. Let's go ahead and utilize this product so we can get them a better deal and make the right offer to win. Very important to be aware of what property it is that we're looking at. So, yep.
One other thing, so the buyer, when they get a pre-approval, they have to be approved at the 7.5, right? Not the 5.5.
We'll never send them pre-approved where they're only approved for the 5.5, because we're playing with a little bit of luck at that point. We can't depend on it. We'll take advantage of luck, but we can't depend on it. So if we're sending them out pre-approved, it's based off that number. It's based off the higher number. So guys, doing good. Doing good.
Is there any additional closing fees besides seller pricing?
No, it's
all the same.
so the way it generally works is whatever we're going to save them in the course of 2 years. In this case, we're saving them $9,000. The seller has to give a credit for that amount,
Yeah.
and that's it. There's no additional cost to the program. So it's beautiful, especially when you know you're already getting a seller credit. Now, let's say you're like, man, this is too much. The seller, we can't get $9,000 seller credit from this home. We could get $5,000. We just know we can't push it any further. You already got $4,000 on the offer, and the inspection came back, and it came back bad as hell. We're like, crap, I can't really get any more. Case closed. You could do the 1 year option. Where in 1 year, where his rate is down by just 1% in the first year, instead of 2% in the first year and 1% in the second year, you're gonna save them $3,000. All we need is a $3,000 seller credit. Yep. So there's some people that we haven't been introduced yet. I'm sorry, ma'am, I didn't get your name yet.
Melissa.
Melissa, I'm Terry. Nice to meet you. I'm going to invite you to talk in a few moments. So we have some people from the U Mortgage team over here. How you guys doing, guys? Doing very good. We have Connect Loans over here, and we have Golden Key are the rest of the people, and Vital Title, Julian and Nick. Fantastic title company. Yep. Sean? And Sean, I'm sorry. We never met yet, so we got to talk later. Yep, nice to meet you. Nice, nice. So are there any other examples that people want to throw out in regards in regards to this example with the buy down. Going once, going twice. Sebastian, I'm going to invite you to talk on this one. Is there anything you want to throw out? Is there anything I missed?
No, pretty well.
Okay. All right. We're going to move on to the next item then. All right. So we're going to go back to page 1 of this. We had skipped to page 2 for that product. We're going to come back to page 1 of this. And on page 1, we have what do we expect for the future, for the market? I've been seeing a lot of realtors and loan officers posts saying, hey, 7% at $100,000 lower price is smarter than 3% at $40K above asking. And on the surface, that sounds right. It does. But I have to challenge that. Number one, prices did not drop by $100,000. Over asking dropped. Prices are still at home value for the most part, a little below. Number two, let's play that example. That's what I have here. Acting like home prices dropped by 25% in 2023. Let's act like that is the actual case. At some point it's gonna happen. The question is when. So let's act like it happens in the first quarter of 2023. Your $400,000 home drops by 25%, it became a $300,000 home. And that's the example I'm giving you guys here in red and green. Your $400,000 home at 3% compared to the same home at $300,000 at 7.5%. Current rates, which rates are gonna go up from today for the foreseeable future. So this is like giving true benefit of the doubt here. In this example, the cons of buying that same home today at $100,000 lower, $100,000 lower, at a much higher rate, more than double of a rate, your payment is $400 more per month. Your amount due at closing is less by $5,000 because it's a lower price. But keep in mind, your payment was higher by $400 a month, okay? The pros are you have a high chance of winning an offer because you have less competition, okay? And you have a high chance of getting a seller credit, the examples that we were giving before. So it's dangerous for anyone, loan officer. I've been seeing realtors and loan officers promote that example that I just gave, where 7% at 100K lower is smarter than 3% at 40K above asking. It's dangerous to promote that because your buyer is gonna think it's actually better, but once we go over their payment with them, they're not gonna see what you're talking about because their payment is gonna be $400 more per month. And this is giving the benefit of the doubt as if prices drop by $100,000, drop by 25% in this example. In reality, if prices stay the same of where they're at right now, which for the foreseeable future, they are gonna stay this way, and rates are at 7.5%, compared to 2021 for the same home, it's a $700 difference per month. So I think it's smart to use that example to promote it's easier for you to buy a house today. It is not more affordable though. It is definitely not more affordable. And it's a challenge I'm putting out there. I don't know if any realtors in this room promoted that example or any loan officers in this room promoted that example, but I've been seeing it. And if anyone wants to talk, Ravana Salji, you got something to say.
I don't know if it's easier. I think it's less competitive.
Less competitive.
It's a better way of putting it. I don't think it's easier to buy a home because at the end of the day, money's more expensive now, right?
Mm-hmm.
So maybe at 3%, it was a better opportunity for you to get more money at a cheaper rate than you are getting it now. I don't like to use the word cheap because, when we're talking about real estate, there's nothing cheap about real estate. Real estate is always, I think valuable is the word that I'm trying to use.
Of course.
I believe, in my personal opinion, paying maybe a higher rate for something that is more valuable and getting the money for a better rate, it's a lot more beneficial for any investor like myself or someone who's purchasing a property that they feel like it was a more valuable property. Because most properties that went for over asking and there were properties that are move-in ready. So the properties that were very competitive, they were all move-in ready properties. And the properties that weren't move-in ready, I feel like they just lingered on the market anyway, which is what we're seeing today. Most of the properties that are moving are the ones that are, turnkey, whether it's residential or commercial, something that you can just kind of move into. And until today, I have a couple of listings that I had multiple offers on because they were priced in a competitive manner. They were move-in ready. They are turnkey. So just to capitalize on what you're saying, so even at a lesser, right now where you're getting the market has regulated, not really has reduced. I don't believe that it reduced by 25%. I think anybody here who is a professional would agree with me. You haven't seen price drop of 25% unless it's something that is unreasonably priced. You know, so
And
that's
I-
kind of what I want to.
Agree 100%. It's not easier, it's actually harder. It's less competition. It makes it easier to get your offer accepted, but homes are not more affordable today. Homes are the least affordable they've been since I've been in the business, since some people on our team, we've been in the business for a long time. And I know Ravon, at least since 2018, and anyone who's been here since before that. This is the least affordable time to buy a home. It's just the truth. So why am I saying that? It's not negativity, it's not pessimism, it's embrace the reality, accept the challenges that are out here today so that you can be optimistic to find the true buyers of today and to strategize to make a winning offer. So again, so when a buyer tells you why they don't want to buy a home, you understand why they don't want to buy a home. And you could be the professional and make the professional decision, this buyer shouldn't be buying a home, or this buyer should buy a home. And since they should, how do I work to convince them to buy a home? And how do I work to get their home offer accepted? That is a part of our job. We have the fiduciary responsibility. Should you buy, should you not buy? They're gonna make their own decision, but we know what's real. We see their financials, we know what's up. It's part of our job to influence which direction they go in, and hopefully we influence it the right way. You should be buying a home, and here's how we're gonna get it done. So, to finish off on one more thing Ravon said, yeah, I don't believe home prices are gonna drop by 25%. And that's what's funny about this example. Even if they did drop by 25%, the payment is still more per month. So it's a big deal. Embrace the reality of what it is so you could spot the true home buyer. Before I get off this topic, Julian, do you mind if I bring up your example and your current home buying experience?
Go ahead.
All right, I'm gonna call you out to speak.
Example.
Yep, Julian's been looking for a home for 2 years. He's been looking since rates were low as hell, right? It's since the rates that we all miss. And at that point, him and his wife didn't find the home that they truly like, right? The homes are expensive, etc. Today, Julian, where does that put you with today's rates? I want to know the truth. Where does it put you? Are you even in the market, or you're still in the market? Okay.
I'm accepting that I'm going to pay 7.5%, 8%, and then refinance in a couple of years.
There you go.
He's one of the
What?
borrowers where when you have no choice, you outgrow.
Sure.
Yes.
Yeah.
Terry, I can
Yeah.
give you a real life example. I'm
Yep.
in the midst of buying a home right now.
Yep.
Right now. And I'm in the same situation as Julian. 2 years looking, stuck in the condo, and overstayed my welcome, and now it's like, whatever, I'm gonna deal with it. Mike, I wanna ask you a specific question. You have a home that's worth $400,000 at 3%. How much does it need to drop to be the same exact payment as 7.5%?
Let's run it. I haven't run that example, but we're about to do it right now. We are about to do it right now. I mean, I haven't run the example. All right, 400,000 at 3%. 400,000 at 3%. Okay, 400,000 at 3%, Sean?
Yeah, I want you to interchange.
Sorry. I'm sorry, go ahead.
No, he wasn't in the room when you were talking about the 2-1 buy-down program.
Oh.
And it might benefit him in this scenario.
So Sylvia, work on that during the intermission. All right, so Sean, 400,000,
I've just picked a number.
$400,000 loan at 3% is a $1,700 a month mortgage payment. Okay. We're at 7.5% today, right? Let me just go to 250. Let's go to 7.5. At 250, the payment's $100 more. It's a big deal, and that's not a realistic situation. That's why I never ran it. So that's a big deal. So what I'm trying to say is, we all need to embrace, it's good to be positive and optimistic, but it's better to embrace the reality and then be positive and optimistic based off what's real. Let's work on it, you know? That example, the buyer who's hoping for that is not gonna close on a home. If that's the only way they could close on a home.
I have a question. What's
Yep.
an average American refinance rate, right? So that number gets thrown out there 3 times, 4 times. What's an average American? How often they refinance in their lifespan?
But before almost everyone in this room was in the business, the average statistic was 9 years. Since everyone in this room has been in the business, and I'm gonna go based off Ravon in 2018, I think almost everybody was after. No, the average is like 2 years.
So
2 years.
So to add to
Yeah,
that,
maybe less, maybe less.
30-year loan, back in the day, so an average prior to 2020, the whole craziness of 3%, that was 3 times 3.3 2-3, right, percent,
Yep.
right? So in a 30-year term, you would refinance your home 3 times, 3 plus, by the way. And now it's every 2 years, so 30-year divided by 2, that's 15 times in your life term. So you would refinance your home 15 times in a 30-year loan. Obviously, those numbers are,
Yes.
exaggerated.
Yes.
But prior to that, prior to this pandemic and all this crazy 3% rates, it was 3 times, and that's what I read, 3.2%, or 3.2 times to refinance your home in a 30-year term.
Yep.
So I purchased a property in Chicago, which is an investment property that I purchased, and I actually bought it at a 7 or a 6.75%. When the lender told me, oh, well, this is what you're gonna pay and whatever, and I'm like, dude, I don't care. I really don't care. It's an investment property. I'm probably gonna refinance it in 3 years anyway. Truthfully, if you're thinking in a business like, so you fall in love with a property, our job as educators, our job as influencers, our job as realtors / mortgage, we gotta influence their opinion. You gotta let people know and educate them about the truth of the matter, that if they fall in love with this house, they're not gonna find the second opportunity to actually put an offer on that specific property. Whether it's a property that is residential, commercial, etc., right? You're doing multifamily now, so if it's an investment property, we purchased a property, me and my partners purchased a property that's an investment property, multifamily, and we overpaid for it, We want full price at a higher percentage. It's not a 3 or 4%, trust me, it's like 6.5%. And personally, I think it was a great opportunity because I feel like in 3 to 5 years, I'm gonna refinance that property anyway, and it made sense. So the investment, whether residential, personal, primary, whatever it is, if the investment makes sense, our job as educators is to let, fiduciary duty, to let our clients know, hey, you're not gonna have a second chance at this. This is your only shot, right? So once you explain these opportunities to them, once you explain the value of them purchasing that property at that specific time, if they really truly believe what you're telling them, and you have to tell them the truth, it's a valuable investment, at the end of the day. It doesn't matter, despite the rate. The rate, I know a lot of people think about what my payment is today. The rate doesn't matter, it has to be affordable. Otherwise, you're not gonna be able to get that loan anyway.
Exactly. And I wanna touch on to the point of investment. Us as loan officers, and you guys as realtors, there are a lot of people that still have cash and they're trying to utilize that cash for investment properties. And the question you have to, the investor, your borrower, your buyer has to ask themselves, and that you gotta help them see this, is on this home, at today's rates, at today's prices, if I'm gonna rent it, could I make money in the next 3 to 5 years? Minimum 3 years if you're gonna rent it. Minimum 3 years, right? Can I make money off it? If the answer is yes, then do it. If the answer is no, then don't do it. Okay, let's say someone is looking for a flip opportunity. In the next 1 year, if I was to buy it at today's rates, at this price, whatever it is, can I make money by flipping the home? And if the answer is yes, do it. If the answer is no, you don't say, hey, investors, don't look at homes. You say, don't look, this home is done. The answer was no, next home. You gotta move on. Me and Ravon were looking at a property. Me, Ravon, Newer, and a few people were looking at a property, and the numbers just don't add up unless we get it at a certain price. And if we get it at that price, we're gonna do it. If we don't get it at the price, and it doesn't look like we're gonna get at the price, but I haven't given up, guys. I'm gonna go and see these guys. We'll see what happens.
I'm already in.
Yeah. And if we get it at the price that we want, the numbers work. So it's not, I can't be an investor today. It's, let me find the right situation to where I can make money as an investor.
I think the question is, how can I be an investor today, right? So always, if you're looking at a specific scenario, there's so many different ways to look at a scenario. I always look at it as, how do I make it possible, not can I make it possible. So if you keep asking yourself, the question is, how can I do this, not can I do this. Mm-hmm. So ask yourself is, how you can make this scenario work. And the funny thing is that in today's market, you can actually make it work for your advantage. Because you have the opportunity to negotiate. And that's essentially our job. So I've been in the business prior to the pandemic. So a lot of people that haven't been in the business prior to the pandemic, and this is actually normal. What we're doing today is negotiating. That was a part of our duty. That's our job. That's what we should be doing. So a lot of people are like, oh my God, the market is crashing, this and that and whatever. And I just never look at this negativity. I kind of move forward and I make it work for my client. If you truly want to make something work, you got to ask yourself, how can you make it work? Not can I make it work? don't give up, just make it happen, make it work, that's your job, that's what you get paid for. The deal doesn't close, you don't make money, and
I'll finish that example with right now there's a lender we're trying to get approved that has a specific product for us. They denied me. They denied my company and said, nope, we're not gonna do it. I fought, I got with their legal team, and we got approved. It took over a week after they denied, but we got approved. And now that product, we could offer. And basically it's a very expensive home equity line of credit. It has to do with refinances. It doesn't concern realtors too much, but we could do it now. Point being, didn't give up, as I'm not giving up on that property, guys.
you didn't ask why didn't you said, how can I make it work?
Correct.
Right? So you just kinda,
Correct. I didn't even, I addressed the stuff they denied real quick, and then I went on to why they need to approve me. Very simple, you know?
Even like houses on the market now for a month or two, that would used to be normal.
Mm-hmm.
normal scenario.
So like, selling in 3 days was very abnormal in the past 2 years, you know, so. Like now, as I think as we get back to that the next year or so, like when a house on the market for 30 days, that's just normal, you know, there's nothing wrong with that, so.
Agreed,
Can I
100%.
ask you guys a question about value to the realtors? When you look at a house, let's just say it's listed for $500,000. How are you guys determining what your client should pay for it? Is it just what they'll take? Is it based off?
Comps.
It's multiple factors.
Marcino, take this one.
So there's actually multiple factors. You can check comps and figure out what the real value is today for that property, but it's also situational. So you have to kind of get a hold of the listing agent and do your due diligence. There's a lot of information that can be uncovered if you have a simple conversation with the realtor. So depending on the client's situation, you could probably have a lot more to bargain with than you know right off bat. So really, it's situational depending on the property.
Yeah, the condition of it, what's sold in the area, you know, how long it's been on the market, so there's like a lot of factors that we look at.
I think that's the difficult part now, because now we're starting to see homes sit for a month.
Yeah.
And sellers are getting all crazy, like, wow, sitting for a month, like,
Yeah,
okay, that's
yeah,
normal.
and that's, you can take advantage of that,
Right,
you know, and
but
that's
at
what
the
we've
same
been
time,
doing.
from our perspective, it's like,
Yeah.
what is the true value right now in this quirky market, right?
Yeah,
Is it
yeah,
like-
no, it is difficult, but,
Whether
you
it's
know.
this market or another market, the true value is what you're willing to pay for it.
Yeah,
Yeah.
that's true.
That's
What
what
is worth to
determines.
you?
What is it worth to you? Is it worth your peace of mind? Is it worth that you walking in, not calling in a contractor to gut that whole entire property? I know people that paid $300,000, $400,000, $500,000 today over asking for specific properties because they feel like they're so unique, these properties, they're so unique that they cannot get another opportunity, they can't get another shot at it.
Right.
So, one of my best friends sold a property for 1.4 million. My opinion, that property was worth $1 million. But it sold for 1.4, why? Because the buyer was willing to pay $400,000 over asking, this just happened like a week ago. The buyer was willing to pay $400,000 because he's not gonna get a second chance.
Residential or investment property?
Residential.
Yeah.
Residential,
As investment or primary home?
primary home,
Yep.
okay?
Sean, to give you another, I'm sorry, Ron.
No, go ahead.
Are you sure? To also give you another example, like my sister recently bought a home too, and when they were going into the home to purchase the home, it was on the market for a minute, it came off the market, went back on the market, and then when they went to go look at it, they were like, oh, like, I don't understand why it's been on the market. So then they called the realtor, like he said, so call the realtor to get the information you need. They found out there was no AC unit through the entire house. So they had the vents, but there was no system. So they had to buy an air conditioning unit to put in the home. They all ran off fans and things like that. The homeowners never believed in air conditioning, even though the home was built for it and they have everything for it, they don't have an actual unit. So with that, the realtor went in lower than asking, and then after inspection, even went in with a seller credit, and my sister got everything she wanted.
But
Even though the home
then
should
with
have
that
been worth
example,
more.
Let's, like, what's that house worth? Like, your opinion could be it's worth $550. Terry could say it's worth $6. Ravon could say it's worth
So
$5.
based off all the homes in the area and what it was selling for, they had it listed around that price, but really it wasn't worth that price because you don't even have an air conditioning unit in the home. So like things came down because of it not being actually comparable to the other homes that sold for the same amount.
Technically, even though it might have passed livable standards, it really wasn't livable because it doesn't have
Yeah.
what you said, you know?
Discount more than,
I
let's say,
wanna-
$8,000 is made up for the $5,000
Yes.
unit.
I wanna chime in for a second.
Appraisal?
Yeah, I was gonna ask about appraisals
I
as well.
wanna chime in for a second. So, let's just say you have 10 things on your list, right? So if I can check off 9 of those things, and I tell you, I'm gonna find you exactly what you want, in the specific area that you wanted, and I'm gonna check off 9 of your 10 items that you really wanted. But, you gotta give me $50,000 on top of that asking price. but I'm checking off 9 of the things that you wanted, maybe 10 of them, right? Would you not pay for it?
Yes,
What's 50 grand?
100%. Over 30
Yeah.
years, 100%.
So to answer your question, forget about the appraisal, forget about everything. You're willing to pay $50,000 over whatever the price is just to get that property, you know what I mean? So, and appraisals don't really, they only come into place when you're putting that 3%, 5% down. A lot of people are putting 20% down, and you can play with that, right? With that loan to, what is it called? Loan to value, right? That rate, you can play with that rate, where you actually end up paying almost the same, or maybe a couple $100 more than your regular, where your payment is supposed to be, and you can still get that home, even if it is under appraised. So there's just so many variables, but if I can check off all the items on your list, would you not pay $50,000 off?
Because, like, with my budget, my payment went up $900.
You just answered your own question.
But you're right, I would pay that extra $50 to check.
And I want to cap off this whole topic of the dynamic in the mind of an investor buying the same property versus the dynamic of the mind of a husband and wife for their family buying the same property are two different things. Even though for business we might be willing to pay more as an investment because we know we're going to make our money back, it's more powerful for the primary home owner where their family is going to live. The idea of making money where you live, we got lucky in the last 7 years where you make money where you live. That's on the opposite trend right now. You don't make money where you live. Not today. Investment property, again, the numbers get tighter. He might be not as willing to do what this guy did at 1.4 million on $1 million valuation, right? But primary home is where my family's gonna live. I could afford it. And that's an extreme example, but if we brought it down to like 400,000, 300,000, that's 350 compared to 300, right? And some of those, even though the market has dropped, those examples still exist. That home is just that badass. It's just that exact spot where the family wants it. It's still there, it's just rare, you know? And then one other thing, I have everyone until 5 o'clock, so we got 40 minutes, 50 minutes. We were gonna stop for lunch, but I'd rather finish, because we're almost done, and then we all eat, we all network, we'll have a good time. I'd rather finish if everyone's down for that, instead of stopping for lunch. Cool?
Did Julian speak already?
We're about to get him here in a moment. Oh, he's next up.
Can I go to the bathroom?
Go to the bathroom. Go do your thing.
Hold on. I'm actually gonna go
I need
up.
the pass, bathroom pass.
I'm gonna
That's
continue.
my key. I need a
Yeah.
It's like a credit card, $5.
Oh, this is both doors, it's not in the hallway.
Okay, so the whole idea here of this example is, again, understanding the true dynamic of our buyers, their families. There's a certain amount they could afford. I can tell you right now, if this was my family growing up, and we were like, yeah, let's go to our current, $350,000 home, which is what I live in right now, around a current valuation of $350,000, maybe $400,000. And let's go to a $650,000, $700,000 home because rates are so low. Let's do it. Let's say we're having that conversation when I was in high school with my dad. My dad would be like, yeah, let's do it, 100%. But if we didn't move yet and the market is what it is today, I'm telling you right now, my dad would shut it down and he'd be like, let's renovate, let's finish the basement, let's finish the backyard, and we're gonna hang out here until things change. Because it's not affordable for me as a family anymore. So you must understand the dynamic and really see what it is to give the right professional advice. And again, when you see they should be buying a home because they're a growing family, etc. You push them to do it, which goes into the next part, what we're gonna focus on. The deals we gotta focus on, which I'm gonna wait for them to come back to really get into it. But if there's anything anyone wants to add in regards to what we already talked about, what we have been talking about, you mortgage, I'll give you guys the floor in regards to examples of everything we just talked about in the last 10 minutes. Anyone want to speak?
Everything you said is pretty much accurate.
Mm-hmm.
Everything you're saying is perfect. Good information, very good information.
Thank you. Any examples anyone want to provide of their own situation that would reinforce the idea or?
No, I'm about agreeing with everything so far.
Very good.
When I walked in late, did you already discuss ARMs?
We did not. So ARMs, and I can tell them on the side. Sylvia already knows, I'll tell Michelle later. ARMs, even though historically they're 0.5%, if not more, better when an ARM is offered, it's not happening today. Unless it's a jumbo loan, it's not happening today. Jumbo loan meaning 715 or above, right? Which today, right now, we could technically do that at 650 or above, okay? Loan amount, not purchase price, loan amount, 650 or above. Next year,
Did jumbo go to 715?
it already is, but it's really for next year, 715 or above. I'm rounding off, it's a different number, but it's a stupid number, but it's pretty much 615 and 715. So it's only better for jumbo loans. It's a 0.5% or better, a dramatic amount, especially on that loan size. It's a big deal. And historically, we had 0.5% better rates. I was selling ARMs all the way from 2000, if it wasn't a refinance boom, I was selling ARMs from 2009 all the way to 2000, pretty much when the refinance boom started, summer of 2019. I was selling ARMs. Whenever rates weren't low, I was selling ARMs because it was always a 0.5% better. And guess what? A lot of people are first-time home buyers. So they're not gonna see the point where the rate rises on them. Is it a risk? Yes. Is it a true risk if you're playing a confident gamble? No.
But Terry, can I play devil's advocate?
Please.
Is 0.5 point worth it to take that risk?
If it's gonna be your permanent home at a large loan amount, no. If it's gonna be your first home, absolutely. Because you already have it planned in your mind that this is your starter home, and starter homes are for 5 years or less. Could it happen where it takes longer than that? Of course. But in general, people's starter home is for 5 years or less. Your average ARM is a 5-year ARM. And even in the worst case scenario, if the rate increased by the maximum amount it could increase by, and you didn't move yet, it takes, on a 5-year ARM, it takes all the way through 7 years to hit the point where it hurts you. On a 7-year ARM, which is what they are today, it takes all the way through 9 years before it hurts you. So you just gotta believe that rates are gonna drop in 9 years.
Well, and also, if you are on the 5-year ARM by then, before it adjusts, you can refi. The rates would have already come down, just, you know what I mean?
And they'll go up only if it's the worst case scenario, if they're like going up, they could also go down.
So no, my permanent home, large loan amount, no, I wouldn't take the risk. It's not my permanent home, any loan amount, I'm doing it, absolutely. And I will do my best to convince the buyer to do it as well. It just sucks right now, unless it's a jumbo loan, they're just not better. Have you guys seen anything different? Sebastian, you guys see anything different? It sucks because it's being promoted like how it used to be, but it's just not there yet. Alex, you want to say anything? Do we got anything from UWM coming soon we don't know about?
Nothing on the radar. I might lose my job.
Are you look, this is 100% confidential over here. You can tell us.
I mean, I'll agree to the point. I mean, we price it out together.
Yeah. Oh, we've been pricing ARMs. They're more expensive at not a better rate than a fixed rate sometimes. It's like, why is it? You could take this back to your higher ups. Why is it being offered to us right now? It's insulting my intelligence. Like I look at it, I'm like, it's costing more. I'm like, why is it even there? So, yeah. They got 1 more minute before I continue to the next item. We'll get it done. Yep. Julian, Vital Title, Nick, Sean, if there's anything specific, any specific message you would like to add in regards to title, in regards to that aspect of things, please feel free. Before you do that, I will say that we've used multiple title companies in my entire career, and we have great ones. We've had some not so good ones, but of the great ones, my best experience, our company's best experience, because I focus on the rest of the team more than my own opinion when it comes to they're working more at the title company than I do. Our best experience has been with Vital Title, and that I believe is because they are owned and operated by an attorney. That they do their underwriting and they understand when it comes to I gotta go to see my attorney, they don't gotta go see their attorney. They're the attorney. But go ahead, Julian.
I mean, in terms of title, there's not really that much in regards to market updates. I mean, title doesn't really change back and forth as market conditions change, but I think that as it relates to realtors and lenders, a lot of times title is kind of viewed as something that's intimidating because people don't understand the language and there's a rhetoric that's used in title that's just might be confusing to people, and I think to be able to disarm yourself of that to help your clients, because now, let's face it, obviously we all know the market is much more competitive than it's been, since 3-4 years ago. You guys, realtors, lenders, mortgage brokers, all need to really be able to deliver the absolute best to your client. So understanding what your seller or your buyer are getting themselves into in the way of title, because it is a factor, although a lot of people don't think that it is, I think is in everybody's best interest. So as a listing agent, always running prelim title. As a loan officer, seeing what's on there, That way you know what obstacles you have, because, you know, there are situations where we're dealing with a rate lock, where we're dealing with a buyer who has sold their current home, has to be into their new home in a certain time period. So just knowing what you're getting yourself into and aligning yourself with a title company, whether it's us or somebody else that you have a relationship with, you can call, get a quick answer, you know, gives you the title knowledge that you need to get the deal done.
I will say 2 highlights, and then I'll let you guys say any highlight as well. I'll tell you one highlight from a sales standpoint. I'll let them talk about from the processing standpoint. One highlight from a sales standpoint, LOs, if you have any, and realtors just go to, if there's a lien on the property, and like something's gotta be figured out, usually, I make the joke that the title company gives us their work to do. No, they'll figure out so much for you before they even present it to you, that here's a challenge, and what can I use you for, what can I not use it for, and we'll take care of the rest. That's for me as a sales point, that's huge. Refinance or purchase. If you guys wanna add anything, Sylvia, from the processing side.
Like Terry said, we've worked with a lot of title companies in the past, but I've been with Terry for like almost 6 years, and previously I've been in the mortgage business for like over 10 years as well, and I've always been like a processor. And I've worked with countless title companies, and I cannot say enough good things about Papaya Title. They are by far, like, they're not even on the tier. Like, they're on their own tier. Like, they made a new tier for how amazing customer service is. They are, the responses that I need, that I get are, I don't know if they're, because they're scared of me. Oh, look at Julia's
I was gonna say it's because you intimidate all of my staff into giving you the answer you want.
Yeah, but I know, the other ones always used to say they were scared of me too, but they
That's a reoccurring theme, you know?
What?
What's the common
literally said that
denominator?
earlier.
Common denominator.
Sylvia
The common
Sheena on the car
denominator.
ID, everybody's hearts drop.
She means well, I promise. She means well, I promise.
Done.
She gets it done. She gets it done. So no, thank you, and
you.
you're welcome.
Thank you guys.
Is there anything you guys want to add from a title side of things?
I'd just like to give credit to Julian. He's not gonna say it himself, but what makes us stand apart is the fact that Julian truly operates the office. You might go to other title companies that are corporately run. Might be a lady that comes out of the conference room, and then you see another person. He truly runs the day-to-day. So when you call the office, he's there. If you have a legal question about a property, he's there. I think that's a benefit that people just kind of gloss over sometimes.
Yeah. Oh yeah.
If I call your office, Terry, to speak to you, that's huge. No offense to anyone.
Of course, no. I make a.
I mean, I go straight to Julian. I call on his cell. I'm like, Julian.
No, everyone understands that too. It is what it is, you know. So, absolutely, absolutely.
I will say one thing too. When I was in a pinch with something, kind of an emergency that happened, I called Julian. He was on vacation. He just got off like his flight or something, and he literally like made things happen.
Yeah.
You know, and he wasn't even in Michigan. He was on vacation. I was on
Anything for you
vacation.
guys.
Hey Terry, I'll give some
Thank you.
perspective. I actually just joined the team roughly 2 months ago, right? So I spent the last 11 years of my career at Amrock, which is obviously a big, well-known national settlement agent. But what actually stood apart, one of the first things I noticed, is the actual knowledge that our team has, that Julian has, that Sean has within the industry, that kind of sets ourselves apart from a national provider who you might get somebody on the phone and they don't really know what you're talking about, in all honesty, you know. And I spent 11 years having to deal with that from a service perspective, because I managed lender clients, you know, of the likes of Morgan Stanley and PennyMac. And one of the biggest complaints that they always had was either I can't get someone on the line, or I get someone on the line that doesn't know what they're talking about, right? So this gentleman right here and Sean, you know, who are actually attorneys, but also our staff, our 3 escrow officers, are the most knowledgeable people that I've ever seen from a title perspective after spending 11 years in the industry, right? Title is not the most exciting thing in the world, but it's extremely important, and it's very important when it comes down to the actual timing of getting a consumer closed. So from my own personal experience in dealing with the ability to provide service, or the inability from where I was at compared to where I am now, is second to none. And I'm actually learning a lot from just the girls that we have in the office, and Julie and Sean as well. But I mean, when it comes to a knowledge perspective, to be able to sell, to Terry's point, to realtors or lenders that I'm talking to, and saying that our shop is run by actual attorneys who went and studied law for this stuff, is a huge selling point, and something that's a big factor. So,
Thank you, Nick. All right, so adapting to the current market, we did a lot of setup for it, and we're gonna go through, you know, the main focus. I've already talked about, the current challenge that's in front of us, accepting that homes are the least affordable they've been in 10 years. Embrace it. It's okay. It's all good. Okay? With that being said, let's be hype about the challenge. There's still home buyers. There's life milestones. You're getting married. You got to rent or buy. There's your buyer. Okay? You're having your second or third kid. You're growing. You got to buy. There's your buyer. Okay? You have ballers, people that are just doing very well no matter what the market is. They're doing very well right now. They're gonna upgrade their home. It's as simple as that. There's your buyer, okay? You have the elder couple that, speaking as Chaldeans, we all live at home for a very long time, usually until we get married, not always the case, but you got married and then now everyone is out of the house. Now you have the mom and dad who might have this home that they don't need anymore, this large home. They just want a home that's comfortable for them and where they could host the entire family over for family gatherings. And that's it. They don't need all this space. Downsizing. There's your buyer, okay? There's your investors. The example I gave, in any market, whether rates are 2% or rates are 10%, there's always gonna be the investment property that makes sense. Investors will not stop. Smart businessmen, we were talking about business more than mortgages and real estate. Smart businessmen and women who are buying investment properties are gonna find the property to buy, no matter what rates are, no matter what prices are. Because can I make money in the next 3 years renting? Can I make money in the next 1 year fixing and flipping this home? It's always gonna be available, always. So those are your buyers. How do you get in front of those people? There's networking, and then there's leads. So I'm gonna challenge everyone. We'll see who's down for this, all right? Can I get a commitment of 1 hour, 1 power hour per week, where you're going after your own network? Well, show of hands, please. I'm down right here. 1 power hour per week going after your own network. All right.
I want to commit to that.
All right, let's do it. We got to, because look, anyone who's
My example.
anyone who's saying that it's less, anyone who's denying that there's less volume to go around right now is, ignoring the truth. I'm embracing the truth and I'm going to work with it. So 1 hour per week for my own network. Who's here to commit, this was a tough one, to 1 hour per week on leads? Wait, Sylvia, what happened? Where's your hand at? All right. There's Jasmine, there's Laurel. Who's here to commit 1 hour per week for leads? All right, hey, look, I just want the truth. That's also, I appreciate the truth. Who's here to commit to 1 hour per week on leads? Can I get it?
I'm down.
All right, okay.
I have a new buyer right here.
There you go. That's network. That's a part. Allocate that to your 1 hour of networking. So.
I just want to say one thing is, you have something here that says back to the basics. Truthfully, I think that anyone wants to excel in this business, you have to go back to the basics. That's, at the end of the day, that's all that matters. Relationships, connections, being active in the business, that's what it comes down to. And if you're not doing any of those things, I don't think you're going to excel in this business regardless. The past 2 years were just something that was a bonus to all the agents that were already, right? So it's a bonus, And for the people who have been in this business for longer than 3, 4, 5 years, they understand this. But for the people who haven't been in this business for that amount of time, they will not get that the last 2 years were just kind of like I said, like a bonus, You got to capitalize on that bonus, and you got to use some of that money that you've made and kind of put it back into your business and move forward and go back to the basics. Connections, relationships, being active in the business, not necessarily just trying to promote that, I sold $10 million, I sold this or I sold that, but actually providing value to your network, providing value to your actual sphere, and being organic and being authentic and genuine, like Terry has been for the past 10 years that I've been watching him do what he does best. And everybody who's been in the business, who's been authentic, who's been realistic, who's been kind of capitalizing on that slow grind, just keep that going, If you're not doing any of that, you're not gonna thrive. That's the bottom line,
It's a simple truth. Embrace the situation and take advantage of it in any way you can.
And one more thing, I think it's incumbent on all of you guys, loan officers and realtors, to get people out of this culture shock that you and I talked about the other day, because I think it's a culture shock. The last 2 years, everybody got used to, my neighbor got 50 over ask, or my cousin got a 2% interest rate, or it's a culture shock. It's a fluke, like Vanessa mentioned, And you need to do a little bit of psychology with your clients to get them to,
Absolutely.
glue the deal back together.
Yeah.
So.
The best example I use is what did our parents used to buy houses at? 11,
My-
12,
my-
15,
my-
15%.
Yeah, my dad bought 9%.
I mean, not even, back in 2015,
I was gonna say,
a
it's just a
4 1/4,
pandemic. It took a pandemic
4.75
to
was
just-
Yeah.
normal, that was
My-
like a steal.
My
Yeah.
first house
4
was
1/4.
5.5, I think, in
Yeah.
2018 or 17
Right.
or something.
So everything that's been said here is called education, right? And a lot of people don't understand that. So it's kind of like our job as public figures, as entrepreneurs, to educate our clients and have them move forward with that knowledge. Because a lot of them don't know that. They don't know what Julia knows. They don't know what Vanessa knows, right? These things, we know it because we've been in the business for that long. A lot of people don't understand that. So it's kind of our job, it's our responsibility to educate our clients, our sphere, really. Once we talk about these things and educate them, that's how you attract people and have them gravitate to you. That's just, I truly believe in that. I've been very successful at what I've done, and I've used those, those little things, those education factors, those everything that you guys just mentioned. I literally use that towards me, and everywhere I go, whether it's a wedding, party, engagement, or even just like a little class that we do, I just have people come and ask me these questions because they understand that I have the knowledge and experience about these things. So just like use that to your advantage, because they're all educated, and these classes are just incredible. Terry, I'm sorry to cut you off.
No, please.
Thank you for this.
Oh yeah, you're welcome.
I'm a buyer, so I'm on the opposite side of the equation here. I'm here to get a lot of information. I want to buy a house for my boys. They're in high school right now, but they're going to be going to college, so something around there. I may have to rent it until they move into it. So I'm here for the information because interest rates are just climbing really fast, and I don't know when they're going to go down. So to me, it seems like either buy a house all cash or maybe a small amount of a mortgage, or maybe I didn't see it on here, like a HELOC, and I don't know if nowadays they if I can renew it for like a small fee to like fix the interest rate, and then that could be what I could use to buy another home. I'm not sure.
I'm happy you brought up the HELOC for a purchase because it wasn't on here. So I want to touch on that. Do you own a home right now? Do you have equity? Okay. You probably have a low rate on your current mortgage.
Well, I mean, I don't have a mortgage.
So it's free and clear. Okay. You could do a home equity line of credit or just a straight mortgage to get the money to buy your home. But at the end of the day, you're still going to borrow whatever money it is, whether it's on this home or whether it's on the home you're buying that you're borrowing on. You're going to be paying current market rates. With that being said, you could make yourself way more competitive to win the home that you want for your kids near college town is what it sounded like, right? So should you come in with a higher down payment, or should you come in with cash because you did a home equity line of credit or a cash out on your current home, and that allows you to win your home because you came in cash or just again at a super solid offer with a high down payment? I agree with that 100%. 100%. The example I wanted to give was acting like you have a $200,000 mortgage at a low rate, and you could do a line of credit at whatever you want, at whatever today's rates are, leave your current 200 at the low rate you already have, and get the money to buy the home. Same example works regardless. So I think it's very smart of you to try to buy a home right now, regardless of whether you finance it or cash it out, because I would argue you should finance it. I would say that because if home prices do drop, your cash is already gone. If home prices, if they drop and you did a financing, you borrowed the money. You didn't really lose on your cash. So I think it's smart for you to do it. I would argue you should use money. You should use a mortgage to get it done, because it is up in the air. I do believe home prices will drop. The question is when. I don't think they're going to drop as soon as people think. I don't think they're going to drop as soon as people think, and therefore I would finance it, personally. How old are your kids? Just curiosity.
14, 16.
So you're really out of the game. You're really out of the game. Oh yeah. Very good. I think absolutely. Lock it down, make money on it temporarily. By the time they're 18, 19, they're there. That's very smart.
And another thing, rental prices will skyrocket over the next couple of years. Because
The highest it's ever been.
Yeah, because mortgages will become unaffordable for buyers, so they'll have no choice but to rent. So if you're renting it, you're in a prime position to make money.
And rent prices are gonna continue to go up because as more investors are borrowing at today's rates, rent has to go up. And the investors who borrowed at yesterday's rates are gonna increase their rent too. Why? Because they can. Because they know all new investors are borrowing at today's rates. So rent is gonna go up, and you could be a part of the first wave of investors that increase rents because it's only natural. It's only the natural process of things. Does it look like you want to say something? Nope.
Story I could share with you, but we'll share it after if you want. I don't know.
Yeah, please.
Back in '06, my family, not myself personally, but my mom and dad and my sisters moved here from Windsor to Canada, and they purchased a home in Sterling Heights. They wanted a specific school district. They ended up buying the home for $187,000. Ended up spending almost $15,000 to remodel the house. So we're at $200,000. It's a 1,500 square feet ranch. It's a basic home. 2008 the storm hit. 2011 the home was valued at $130,000. Everybody told my father, which was an investor at that time because we were from Canada, we had an interest rate of 8.5% to let the house go. My dad said, you know what, I can afford my payment, forget about it, we're not gonna leave the house, we're living here, that's how my dad thinks. I kind of learned from that story. And 10 years later, home values went up, I ended up selling the house for $240,000, right? So, I kind of look at that story as of it almost set me up when I got into real estate in 2015. It made me understand that whatever goes down, it's okay, because eventually you can't create any more gold, you can't create any more property. Property is eventually going up, whether we like it or not. Inflation forces it to go up. You have $100,000, that you do in your bank today. In 10 years, that $100,000 is not going to be valued as what it's valued at today, because inflation forces that $100,000 to go down. Versus if you have a property, inflation will force it to go up in a 10-year span. Now, fluctuations will happen. That's economy. It's just a part of life. It'll go down, it'll go up, just how it is. But if you kind of wait it out, rather than having the $100,000 sit in a bank, all my money is invested in real estate. Because real estate, whether I like it or not, it's going up a lot more than my actual cash value will go up by. So if you have that cash value and you want to put it somewhere that is safe, real estate is the safest place to put it in. Now, I agree with Terry, because you can take that, you can allocate the $100,000, instead of buying one property, you could buy 4 properties. So take the $100,000 and use it as a down payment, $25,000 here, $25,000 there, and so on and so forth. So, diversify your investment, but don't ever be afraid in investing in real estate. Because whether you're buying it at the height or you're buying it at the lowest that it's ever been, it's always going up. So in a 20-year span, your investment is safe. And I truly believe that this is the case, because not only that I value my occupation, but I truly believe in what I do, and this is why I invest in what I do. I don't just preach it, it's the truth.
I think you and him should talk after, because he owns a few investment properties where he's speaking from experience. He owns his own, So yeah, for sure.
Have some lunch?
I'm gonna wrap it up just so I can respect everyone's time. There's only 2 more things we're gonna go over. Products. I'm not gonna go in detail as I wanted to because we're limited on time. Get familiar with FHA. It's gonna become more important in 2023. I promise you, because as homes get more expensive, less people qualify. They're gonna need FHA to qualify. So get more familiar with FHA. Really, if you're dealing with a good loan officer, and I think the loan officers in the room will agree, our FHA deal is just as good as a conventional deal. It's gonna close in the same amount of speed, and it's gonna get done. In some cases, it's a better deal for the actual buyer, depending on the situation. So get familiar with confidently embracing your FHA buyer, okay? You can work with each one of us afterwards at a later date on FHA. Know that there is a conventional product that just works badass for people with low credit scores. It's called Home Affordable. And we already talked about ARMs and seller buy down, so that's done. I'm gonna go over one last set of things. And what I'm about to tell you is something that is our company philosophy, our company promise, that is good business for everybody. It doesn't matter if you're in mortgages, you're in real estate, you own the restaurant across the street, you own that Big B coffee, it doesn't matter what it is. What I'm about to say applies, okay? And anyone who could embrace any of these, you're just gonna do better business for yourself, first and foremost, and then better business for the company that you're with. What I'm about to show you, we do already. So here's a promise that you could all expect, whether you're a realtor working with us or we're internal, okay? That is quality, transparency, and speed. Quality, meaning whatever we do, we're gonna do it the right way, the best way. Transparency, meaning good news or bad news, we're gonna know about it, you're gonna know about it. Good news or bad news, we're gonna rip off the Band-Aid, we're gonna make decisions, we're gonna move on. Speed, we're gonna go fast. What more do you want out of any business professional you deal with? What more do you want? Quality, transparency, and speed. Get it done, make decisions, and move on. We do that, again, with our clients, with our realtors, and we do it internally, and that gets the job done every time.